There's a retention problem building inside commercial insurance carriers, and it has nothing to do with underwriting being too hard. Over the past year, we've had confidential conversations with underwriters across multiple commercial carriers, different regions, different leadership teams, different lines of business. And the language is nearly identical. I'm not burned out from underwriting. I'm burned out from everything around it. When seasoned professionals start taking recruiting calls, they're not acting impulsively. They've thought it through. What they're describing is a systemic workload design issue. Submission volume has increased, but appetite discipline hasn't tightened with it. Compliance documentation has expanded, but workflow hasn't been redesigned to absorb the extra layers. Authority exists on paper, but in practice it feels restricted. Administrative and documentation work now consumes a disproportionate share of the day. The architecture of the role hasn't evolved at the pace of regulatory pressure, audit scrutiny, and reinsurance oversight. So the burden shifted almost entirely to the underwriter. Here's the issue. Compliance layers were added. Approval thresholds were tightened. Documentation requirements expanded. Very few organizations redesigned workload to match. So now, underwriting judgment competes with documentation survival. And when judgment becomes secondary, engagement declines. When we debrief underwriters who weren't actively looking but chose to move, the patterns are strikingly consistent. Every file feels like it needs to withstand litigation. We quote too much that we know won't bind. I have authority, but I still have to over-justify small deviations. There's no time to think strategically about my book. I spend more time explaining pricing than analyzing risk. Notice what they're not saying. They're not saying the market is too hard. They're not saying the risks are too complex. They're not saying they can't handle the workload. They're saying the work is misaligned. There's a difference between being busy and being effective, and across carriers, that difference is becoming painfully clear. Here's what we see driving attrition faster than compensation gaps: high volume, low value work. Senior underwriters are spending meaningful time reviewing submissions clearly outside appetite, chasing incomplete applications and supplemental forms, re-entering data across multiple systems, writing extended documentation for modest pricing decisions, responding to layered internal review follow-ups, preparing manual renewal comparison reports. None of those tasks improve underwriting profitability, but they absolutely increase fatigue. When underwriting analysis, pricing strategy, and broker engagement represent less than half of a senior underwriter's week, retention risk rises sharply. There's another quiet trigger that doesn't get discussed enough: authority erosion. On paper, authority levels look intact, but informal escalation culture overrides them. When experienced underwriters repeatedly defend reasonable decisions, small pricing deviations, thoughtful structure adjustments, two things happen. They start documenting defensively, and they disengage strategically. Autonomy is one of the most powerful retention drivers in commercial underwriting. When that autonomy erodes, even strong compensation won't fully offset it. So what should be happening right now? First, conduct a workload architecture review, not a morale survey, not a pulse check, a structural audit. Break down how time is actually spent. What percentage of the week is underwriting analysis? What percentage is documentation? What percentage is approvals? What percentage is rework? If underwriting judgment is below 50% of the role, the structure needs redesign. Second, install real submission discipline. Across carriers, I'm seeing underwriters reviewing submissions they know won't bind. Appetite clarity matters. Minimum submission standards matter. Broker education matters. Filtering protects underwriting bandwidth. Third, separate compliance execution from technical expertise wherever possible. Compliance documentation may be required. It does not always require senior underwriting time. Use underwriting support staff, standardize documentation templates, automate repetitive tasks. If you free up even 15 to 20% of time, morale will shift. Fourth, clarify and protect authority. Define clearly what sits fully within authority, what requires escalation, and what documentation is sufficient. If experienced underwriters feel they must over-document simply to protect themselves internally, trust has already weakened. And finally, treat exit interviews as operational diagnostics, not administrative formalities. When multiple departing underwriters cite compliance fatigue, administrative overload, erosion of authority, and lack of strategic time, that's not individual dissatisfaction. That's a design flaw. Strong candidates are selective. Before agreeing to interview, they are asking pointed questions. How much real authority will I have? What is submission volume? How layered is compliance review? Do underwriters have support staff? If those answers aren't clear, recruiting becomes reactive. The carriers attracting inbound interest right now aren't perfect, but they are intentional about workload design. Burnout in commercial insurance underwriting isn't about difficulty. It's about misalignment. Reduce high-volume, low-value work. Clarify authority. Design compliance thoughtfully. Underwriters stay where expertise is respected. The hiring managers who recognize this early will become the carriers people quietly call about.